Hi, this is Tim Kelly from Breakthrough Insurance Group and the Simplicity Group, and welcome to the Big Case Spotlight. I am here today with Michael Thames from Capital Analysts of Jacksonville. How are you today, Michael?
It is a cooler Tuesday morning here in Jacksonville, but doing well. It's been a good week so far.
Great. Glad to hear it. So, in our case spotlight, we want to discuss a large life insurance case that you recently closed, and we just wanted to work through that a little bit today and ask you some questions about that. So I'll set up the case a little bit for us here just to give some general background. So you had a client who was a 71-year-old male, and he had 3 whole life policies with a total of $1.8 million in death benefit and $1.2 million in cash value. Now, he personally owned these 3 whole life policies, and you came to us looking for some advice on what to do with these policies and how to potentially help this client. So first, if you don't mind, could you give us a little bit of a high-level summary of how you started the conversations with this client and some general background on him?
Happy to do that. This is an interesting case because this is definitely, I would say, an ultra high net worth client. So we go through a pretty detailed deep dive discovery process with all of our clients, but he wasn't a typical client where we would run through, more of a Money Guide Pro process where we're just trying to figure out, are you going to run out of money or not? We've been working together for a long time. I work with this couple, their children. So we work here at Capital Analysts as an ensemble firm. So it's not advisor versus advisor. It's let's work together to figure out how we can look through a client's financial picture and try to make everything just a little bit better. So when we got to risk management and insurance planning, we knew he had these policies. We knew he didn't have really a close relationship with the agent. He bought these policies when he was very young, kept paying into them. So 2 of them were paid up. 1 of them was being paid for with dividends. Just something felt like we needed to really deep dive this. And so we came up with some ideas on our team first. But as I shared with you before, that our team is very slow to get to an idea, much less a recommendation. And so that's kind of how the relationship, just to tee that up, how that started and how we got to the point of looking at the insurance policies. But we were able to very easily get all the data from Northwestern Mutual in this case, and we had all the moving pieces we needed to. So we started on our team, and then we reached out to Big and worked with your team because we always want a bulletproof plan, especially when dealing with insurance strategy.
Right. Great. So kind of had an idea of where the client was. You had his in-force illustrations from the current carrier. And how did you use Big's sales support resources to help you prepare a recommendation? So at some point you reached out to your advisor development consultant here, Tony Spargo. How did Tony help you through the process?
Well, Tony was very open and honest with our team. He right off the bat recognized this would be an advanced case, not only because of the dollar amount, but because what type of product we may need to get into may have some other strategy or some other options available to us that we weren't thinking of. So we had a really good call. We shared our ideas, and we did eventually settle on our initial ideas. But the huge benefit with Big was having somebody with a legal background on your advanced market team just kind of fact check and double check our thought process to make sure we're not leading the client down a bad path.
Sure.
We also got some other ideas that involved kind of some hybrid options where we would involve some annuities, but we settled on a more simplistic strategy just because this client doesn't need the liquidity, doesn't need the insurance even, and it became more of a, how do we get a little bit more death benefit and then ultimately get this policy out of his estate, right? And future growth on the policy out of the estate.
Right, great. So Tony was able to help you with things like illustrations and to kind of make some recommendations on what the new policy would look like. But he recognized that this was a very large case where there was some estate planning that needed to be done, maybe some trust work. Mm-hmm. And so Tony recommended a meeting with our advanced markets attorney, David Foster, here at Triplicity. And could you talk a little bit about how David helped you to finalize a recommendation for the client?
Sure. So absolutely everything from the illustrations to just kind of making sure that every single piece of our thought process was correct. This client is very healthy, and so we wanted this client to be rewarded by getting the standard risk rating we applied for, even at 71. Mm-hmm. It was interesting because it was almost an added reward to the client for staying that healthy. So we definitely didn't want any future premiums to be due on this client. He had no interest in putting more money or new premiums into it, but David was able to help us think through the process we thought of. He also did kind of get more into, like I said, more of a two-layered approach into what we could do. But we shared with him that this client might not be interested in anything with any additional moving parts or upkeep, if you will.
Sure.
But then they definitely mentioned, how policies that aren't needed are low-hanging fruit for irrevocable life insurance trust planning. And so now, to kind of share the backside of this story, we are in talks and scheduled with the client's estate planning attorney to get this into an ILET, to get all that wrapped up, especially because this client is teetering on the lifetime exemption and unified credit. So we have to be careful, but this was a great way to solve multiple issues. And we ultimately got the client a few $100,000 more in death benefit with a no lapse provision until age 120.
Right.
So it was a win-win-win for the client, a win from the estate planning piece. We got his family more money. And one other recommendation that I would say Tony and David helped us with was to think through the underlying actual policy we would get this into, which has an investment component. So per the illustration that Tony showed us, if the client lives to 85, his cash value has hypothetically now grown beyond that guaranteed death benefit. He lives to 90, 95, 100, 105, and he's that outlier.
Right.
There's potentially millions more dollars in there that his family will benefit from and outside of his estate. So what a great way to solve a case like this with y'all helping us out.
Yeah, great. So you eventually settled on a variable universal life product where that cash value had some growth potential based on the investments inside of the product, and ultimately could really grow quite a bit in terms of death benefit and cash value, depending upon how long he lived. Yeah,
exactly. And we looked back at his other policies, and he was maybe netting 2 to 3% in accumulation because he misunderstood, like most people do, how their policy is actually accumulating value on the cash.
Right.
Well, we showed him, you've got those charges coming out of there. The dividend you're getting shows you usually the gross amount, not the net. And when he found out that this was really kind of a boat anchor, it's not that it was bad or it wouldn't work or it wouldn't provide benefits to his family. It just wasn't the best position it could be in, especially because he didn't need any liquidity or loans or anything like that. He has plenty of liquidity outside.
Fantastic. So once you kind of had all of this in your mind in terms of what you were going to recommend, how did that go with the client? Did anything change when you took your recommendation to him? How did that all go?
No, so we presented the illustration to him in person. It went very well. And again, we just hit those big highlights. We're looking for things we can turn the knob to the right, make everything a little bit better. In this case, based on what we've applied for, if you get underwritten at this risk level, we are able to get a few $100,000 more in death benefit. You won't have to pay anything more into the policy. And so then sharing with him that we can also get this out of your estate so that you're really not having to worry as much about what Congress may or may not do. We went through the illustration and even was able to show him, hey, if you do live past these certain ages and we get this hypothetical growth, maybe it happens sooner, maybe it happens a little bit later.
Right.
There's huge potential upside in this for the legacy transfer to your family. And it was very straightforward. He didn't make us come back or rerun any kind of new illustrations or anything. To him, it was a home run.
Great. So the final outcome for the case was you took the 3 old whole life policies, surrendered them, did a 1035 exchange of the $1.2 million in cash value over to the new VUL policy with no future premiums paid, right? Mm-hmm. No further costs. The $1.2 million in cash value funds the whole thing. And that's what you recommended, and that was the final outcome of the case.
That's correct.
And how did the underwriting process go? Was it smooth for him? A 71-year-old, sometimes they can have some health issues. How did that go through that underwriting process? And what was the final outcome? Was he approved at that standard rate class?
He was, and I have to tell you, Tim, that was a great email. I remember I came in on a Monday morning, and one of the first emails I got was that approval from your team, from Pacific Life. Underwriting overall didn't go too poorly. I mean, the only thing that took a while was this client had recently had like a endoscopy, and some things happened. Yeah. So, there were new records that had to get from the doctor's offices and some other providers to Pacific Life. But we coached him through how that process would work. And he's also an attorney, so he helped keep some pressure behind the scenes on some of these things. The underwriting took the longest because we were waiting for different medical reports.
Sure.
But after we got all those in, it was smooth sailing. It wasn't a big issue. He had his in-home exam, got that scheduled okay. I think the big thing is you don't want clients to have surprises. You want to let them know from right out of the gates if underwriting may be required. We don't know where you're going to get rated. We don't know exactly how long this will take.
Right.
But I did also get together with him and help him speed along some of the reports by getting him to provide some to us to get over. So you really, as the advisor, you should stay involved to make it easy. But the more expectations you set properly, the better it's going to go, especially if it winds up taking a long time. Right.
Fantastic. So so it sounds like that went relatively smooth through that process. Sometimes for a 70 or 71-year-old, like I mentioned, things can get hung up a little bit, but it sounds like that all went well, and he got the standard rate class, which is fantastic for somebody of that age. So the final outcome of the case, we talked about moving the $1.2 million in cash value. Do you recall what that final target commissionable premium was that you got paid on for this case?
I actually don't know the exact figure. Our team...
I can tell you what it is.
Yeah, you could bring it up, but that's probably the last thing we're looking at is commissions on these products. And I think it's important for advisors to hear if you're doing things for the client for the right reason, the money will follow, and we'll let clients know, hey, sometimes there are pretty big commissions that come out of these cases. But that's definitely, I could go pull it up on a report. I know a ballpark of what it is, but it wasn't something we were too focused on. And they're big numbers, right, when you're dealing with that much cash value. But at the end of the day, the client is benefiting in a huge way, net over everything we discussed. And the fruit follows that. So it's good to be on an independent team that thinks that way.
Yeah. So just so as an encouragement for the other advisors out there who are watching this, I will tell you that out of that $1.2 million of cash value, the target life premium for this case was just a little bit under $100,000. So that's the commissionable premium for that case, which is really a fantastic sale. Great for the client, but also good for you guys. So it's a win-win for everybody.
Absolutely.
Okay, Michael, any final thoughts before we wrap up our big case spotlight today?
I'll just leave you all with this. Just collaborate, collaborate, collaborate. We say this all the time at our firm. If you have one advisor, you get what they know, and it really stops there. Work with your business partners, your team, your other advisors, all the resources you have, because not only are you going to learn something new every day that you can use again that will come up,
Sure.
but you really truly get the best outcomes when you partner with other people who have a lot more experience in some of these areas than you do or that you're dealing with day to day. So don't feel like you have to know everything.
Sure.
Go find the right partners, get with your contact through BIG. Same thing goes with investments and everything else that you do. Don't try to do it all yourself. It's hard to make rain on your own.
Sure, absolutely. Thank you for that. I appreciate that. And as Michael mentioned, our sales support team is here to help you, everything from preparing a recommendation in terms of illustrations and reports, but also our advanced markets attorney is here if you have a higher level case that involves possibility of trust work, things like that, or business planning as well. So we're here to help you with all of those advanced planning needs too. So again, Michael, thank you very much for joining me today for the Big Case Spotlight, and I look forward to talking to you soon.
That sounds good, Tim. Thanks for inviting me on the case spotlight. I appreciate it.
Thank you.
All right, have a good one.